This video is going to be a deep dive into bank reconciliation in FreshBooks. I 100% guarantee you that your books are wrong if you do not reconcile your bank accounts, so I'm really glad that you're carving out time to learn this. I'm going to try really hard not to give too much additional commentary about all the things I know about FreshBooks in this video. It is tempting to add the little efficiencies and hacks that I've learned. The hacks will come as you watch more of my videos. I'm going to divide this up into 3 sections. First, I'm going to start with the basics. I've organized it into 6 steps. You have to make sure to catch number 6, y'all. It is the most important step. And then secondly, I'm going to talk about a lot of common mistakes I see people make. These aren't mistakes that you make because you're dumb. It's just that you don't know the exact right clicks to make in the software. And the last section will be a few ways to fix any problems that you have made or might make. The good thing about bank reconciliation is that historical errors can pretty much always be fixed. Now, as you watch this video, if you realize it's kind of feels like you'd prefer to be chewing on glass rather than reconciling in FreshBooks, I can be your bookkeeper. Bookkeeping is definitely an outsourceable task. A middle ground that you can land on is if you realize that you made a bunch of mistakes that need to be fixed, but you don't mind doing your own bookkeeping afterwards on an ongoing basis. I do also provide cleanup services as well. So I can be the one to fix everything and then you can take it going forward. And the perfect sweet spot for you would be to give me the dirty work to get your file fixed, and then you join my weekly office hours group for FreshBooks users so you can keep your books clean and reconciled after I've polished them. This is kind of like having a bookkeeper in your back pocket to keep you on track and hold you accountable to keep your business data accurate and up to date. There are a number of ways we can collaborate to make your business bookkeeping more of a blessing rather than a burden. All right, are you ready for the glory of bank reconciliation? Let's dive in. Step 1 is to connect your bank and credit cards. For BankRec to work, you have to have your financial accounts connected to FreshBooks. I'm going to go so far as to say that if your accounts can't connect to FreshBooks, you actually need to move to a different software. That's a whole other sermon, and you can ask me about it if you want more details. But as of fall 2023, I believe that if your bank and credit cards don't connect and you have more than about 3 to 5 transactions a month on that account that won't connect, then I think the increased time involved to get it right and the chance for human error because of so much hand entering means that you need to look at a different software, even if they are a little more expensive. If you love FreshBooks, stay in touch with me because hopefully they're going to fix some of the problems related to this, and it will be okay to use it even if your bank doesn't connect in the near future. But until they build a manual way to add a bank account or credit card that won't automatically connect, you should pick something else. Great, so your bank accounts are connected. So step 2 is to understand the petty cash concept. Now, to fully understand BankRec, you have to understand the concept that is unique to FreshBooks called petty cash. It is a terrible name because it is not what the word petty cash actually means. It really should be named something like a holding account or a clearing account. This is the holding pen where everything, and I mean everything that happens in FreshBooks, starts. It all starts in petty cash until you tell FreshBooks where that transaction really happened. So during bank reconciliation, we are taking all these expenses and deposits and we're saying to FreshBooks, hey, this expense happened on the Chase credit card. Or, hey, FreshBooks, this deposit happened in that Relay Bank checking account. That's what bank reconciliation is doing. It's taking everything from the holding pen and sorting it to the right source. And nothing is supposed to stay in that holding pen, y'all. If you have a balance in petty cash on your general ledger or your trial balance, either of those 2 reports, that means that your FreshBooks is wrong. Something has gotten inside your FreshBooks file that happened outside of your connected business accounts, and you have to fix it. It might be a legitimate business expense that you hand entered because you accidentally purchased it on your personal car. But even those have to be cleared out of petty cash with a journal entry to move it from petty cash to owner's equity. All right, so now you understand petty cash. Now let's get into the actual reconciliation screen. To get there, you go to Accounting, and when you first connect your account, step 3 is going to be to set your opening balance. My favorite tip here is to put the number 0. This is either the right number, because you connected a brand new account that truly did have a beginning balance of 0, or it is going to make you raise your eyebrows later and go, well, I know 0 is not right. I better go back and find the right number. Because if it is an old account, FreshBooks has this little hiccup where it only imports 90 days, and you have to do some more work to get the remaining transactions imported properly. And after you get the old transactions in, you will go back and reset your opening balance if you need to. You will get your older transactions imported via this button right here, nowhere else, only here. I have a tutorial for getting your historical transactions into FreshBooks the right way, and you must watch that if you have to do that. But I'm not going to rehash it here. In this video, we're going to assume that we've got our whole history in here and our proper opening balance is set. So step 4 is to learn how to reconcile money out. So first of all, if you are new to FreshBooks, I recommend that you do not hit confirm and continue as we're getting into the bank reconciliation screen. It can't be trusted to be 100% right without really knowing what you're looking for. When people are members of my office hours for a while, and I can tell if they're really getting bookkeeping and how to do bookkeeping on FreshBooks, I eventually give them my blessing. But for new users, please trust me and always hit skip. So we're on to reconciling these money out transactions first. Think about all the different ways money can leave a financial account. Let's start with the regular expense. Those are the easiest. You've got the transaction on the left and on the right. On the right, we have a correct merchant and a category. We've already done that in the expenses tab, but now we are going to click left on this blue box and click right, and the button changes to say match, and voila, you match it and it disappears. The next example of a money out transaction is that you pay yourself with an owner's draw. This meaning you're not an S Corp where you have to use a payroll provider like Gusto, which is the payroll provider I use. So let's say this particular money out is a payment you made to yourself. But see how FreshBooks incorrectly assumes that this is an expense and has it over here on the right side? But once we reconcile it properly, it will delete it from here on the right side, and it will also magically delete it from the expenses tab, which is a good thing because owner's draws are not business expenses. So click the left side and come up to the green button that says Mark As and select owner's equity. To be clear, this is the only way to put anything in the equity section of the balance sheet easily. You can make a note if you need to, but no note is required. All right, our next money out idea is a transfer. This is basically the last way that a money out transaction can occur. Transfers are like when you use your checking account to pay off your credit card balance. Or maybe you put money from savings into checking so you can go buy something big. The trick is you have to mark the money out as a transfer, but you also have to mark the money in as a transfer on that other financial account. I like to do a right click and open a new tab and get into the receiving account and mark that paired money in as a transfer as well. Right as I'm marking the money out as a transfer. But for beginners, go to both pairs of the transaction so your brain really understands the concept of transfers. All right, now step 5 is to reconcile money into your account. So think of all the ways that money can come in to any of your financial accounts. Let's talk about owner's contributions first. Likely the very first transaction in a checking account is going to be an owner's contribution. You might make more throughout the year if you are short on cash, or you just really believe in your company and you want to add your personal cash to your firm for some reason, like to make a big purchase or something. So for owner's investments, owner's equity going in, you click on the left side of that deposit and click Mark As owner's equity. I want to point out that we only get one equity choice for both your contributions and your draws, your equity in and your equity out. That might not be what you're used to at other general ledgers, but that is what we have in FreshBooks. All right, another way that money comes into your account is by a client paying you. So you'll notice that even though the bank is connected, it is only the money out that is automatically put on the right side, the FreshBooks side. All the money in that is income will not show up until you do extra steps. So in this case of the customer payments, you first have to mark your invoice as paid before it will show up on the right side, before you'll have something to match to. There are quite a few ways to mark an invoice as paid. I'm not going to go over that now. So I'm just going to focus on a slightly more complex example of an instance where a customer used FreshBooks payments to get paid. So the invoice is marked fully paid by FreshBooks once the customer hits the button that says pay now. But there is also a processing fee that WePay automatically puts in as an expense. And the net of these two amounts matches the deposit on the bank side. So 1 on the left, 2 on the right gets us a green match button. A quick note, you can match 1 to many, but you can't match many to many. And that works for both sides. 1 on the left, many on the right, or many on the left and 1 on the right. All right, another way money comes into your account is via what FreshBooks calls other income. 2 classic examples are either savings account interest or credit card points. To handle this, we have to make an other income entry, and I recommend doing it from right here in the BankRec screen with one of my favorite buttons. Do you know that I have favorite buttons inside of FreshBooks, and I made a video all about my favorite buttons? I'll be sure to link to that video below. So you come here, use the info on the left bank side to get the date and amount, and hit save. And now you have an entry on the right to match to the left. Another way money comes into your financial account is a refund from something you bought. So say you bought a new camera, maybe to make awesome YouTube videos to speak to your ideal client. Woohoo! But it was not exactly what you thought it would be, so you returned it. So to reconcile that, you need to click the left side and then mark as an expense refund. You have to put it to the same category as the original expense. So maybe you put that camera to hardware. So you put it back to hardware when you get this refund. And now as of 2023, this is technically how you classify your expense refunds. But the coding behind this is just pretty wrong. I'm counting on this being fixed soon because it's a pretty bad flaw. I have a video about expense refunds, but I don't even want to share that video because the truth is all the hacks that I've come up with are not perfect. So I'm mostly counting on this being fixed like it should be very soon. And I said I was going to stay focused on bank reconciliation. So just reach out to me if you want more of an explanation about how jacked up the refund button is. Okay, another way that you can get money into an account is if you take out a business loan. Unfortunately, there is no really easy way to handle that. It is too convoluted to give you a really full teaching session on it. But the basic answer is that you would take the deposit that you got, the cash in from the loan, and you're going to mark it as a transfer. Then you have to go and do a lot of work in the chart of accounts and create the new loan account, and then do a journal entry to clear the loan out of petty cash and record it in the new loan account. This is another more advanced concept that you really need to reach out to me to help you with. All right, well, I hope that covers most of the money ins and the money out transactions that you might see inside your FreshBooks account. If you are seeing a lot of transactions that are not in the categories that I just described, odds are you should be using a different software than FreshBooks because you have a different kind of business that FreshBooks was not built for. And now we're on to step 6, and this is the most important step. If you don't do this final step, you aren't actually reconciled. You have to go to reports and run your trial balance. This is where you're going to compare your ending balance on your bank or credit card statement with the balance that FreshBooks says you have. And there's one tiny catch. You have to run your trial balance to start prior to your earliest transaction inside of FreshBooks. If you aren't sure when you started using FreshBooks, you can just use a super old date like 2016 or something, but you have to go back in time to the beginning of your activity. And then you pick your end date as the date of your statement. That number has to match what is on your statement. And while you are here, make sure nothing is in petty cash, for heaven's sakes. Okay, for this second section, I said we will be talking about errors. I will dive a bit more into that confirm and continue button I mentioned earlier. Probably the most common error is when you are reconciling your bank accounts. The very first pop-up that FreshBooks gives you is one that looks helpful and that says confirm and continue or skip. And the presentation makes you feel confident to hit confirm and continue. And I do not recommend hitting this button. If you must hit it, what you have to do is you have to use your eyeballs to check every transaction. You have to check every single one. Because what happens is you can't trust confirm and continue 100% of the time because unfortunately FreshBooks is built in such a way that it incorrectly categorizes transfers that you make to pay off your credit card or any transfers that you make to pay yourself as a single member LLC, which needs to be marked as an owner's draw. So if you have the guts to use this button, you still have to uncheck your transfers and your draws. But you likely hit the button before watching this video. So we're going to clean that up. I'll talk about that in the fixes section. Another error is the wrong opening balance. You go to the top right corner, and if you are not starting from 0, the only way that can happen is if you're starting FreshBooks as of like January 1st of one year, but really your business is older than that. So you had balances on your bank account, and you have to do the math to see what the balance was on January 1st. Now, most checking and savings accounts usually do use the first and last day of the month. But if you've got a credit card, you have to get your transactions, and you have to look at what you spent from, say, mid-December to December 31st. And just that balance is what you're going to write in on January 1st. Call me if that's confusing. I realize it's not 100% clear, but you have to adjust your opening balance to the January 1st date. Opening balance equity is another error spot. When you connect your bank or credit card to FreshBooks, FreshBooks has to have an offsetting debit or credit to that account, and the offset goes to opening balance equity. If you have a balance in opening balance equity on your balance sheet, we'll need to fix that. Stay tuned for that in the fixes section. But for now, grab your balance sheet and see if you have a balance in opening balance equity. And then there's the problem of disconnected accounts. Y'all, never disconnect your bank account. It completely jacks up your balance sheet because FreshBooks doesn't put it in to the same account in the chart of accounts when you reconnect it. It treats it like you started a brand new account. So to check and see if you ever had a disconnected account, you click on chart of accounts and then back to accounting and see if you get this little icon of 3 lines and dots, and you can show your disconnected accounts. If it is an old account, that is fine. If it is the same account that's also connected again, you've got problems. So see if you have this problem, and then I'll get to the fix for this dreaded problem in the next section too. Hey, before I get to the fixes, I'd love for you to subscribe to this channel and leave a comment and a thumbs up if you're finding this helpful. Now on to how to fix all your problems. Remember how I said that you have to match what your trial balance says to what your bank statement says? Well, especially for credit cards, whenever you buy something on the last day of your statement, or in checking accounts when you buy something and maybe there's like a bank holiday, sometimes the transaction date is different than the posting date. And that transaction might be registered in FreshBooks in a different period than the statement that you're looking at. It'll be the first transaction on your next statement, perhaps. I love to see my trial balance match my bank statement. It's the only way that I trust that a FreshBooks account is accurate. And so what I go do is I go and edit the date. If it's in FreshBooks early, then go and change the date to a later date. Or conversely, if it got put into FreshBooks a day or two later than what your statement says, go and change it to an earlier date. I hope that conceptually makes sense, but when you make that change and then rerun your trial balance, then your trial balance will match exactly what is your ending balance on your statement for that period. All right, the next fix is correcting a wrong reconciliation. The only time you need to correct a wrong reconciliation, if it was a transfer or a draw or something like that. Say you categorized your expenses incorrectly and you'd match those, and then you went to change an expense category or a merchant. That's not going to unreconcile anything, or it's not going to mess up your bank rec. So to be clear, let's say you were categorizing Verizon as utilities, and instead you realized you wanted to create an expense account expense category called Internet, and you made that change from your expenses tab. The bank rec for that transaction is still fine. But let's say you put an owner's draw on your profit and loss statement as an expense. Well, that's wrong. So to fix that, you have to go here to the Matched tab, and then you have to actually go find the transaction. There is no way to search for it, so you need to know the date. So jump around by using the chevrons at the bottom. And when you find the transaction, click the blue button on the left, and that will give you a new tiny button at the top that will allow you to unmatch. We've got a verb, unmatch, and we've got an adjective, unmatched. So first hit the verb, and then go to the adjective to get back to the main reconciliation screen. You'll see the transaction has been booted back out, and then you will follow the proper procedure for classifying it that you learned earlier in this video. Another error I see is related to invoices that have been paid, but the amount that showed up in your bank account was net of some processing fees. And sometimes if you use Stripe, for instance, this might be the case. I've seen some people go in and change their invoice to be less after the fact to account for those, say, $5 in Stripe fees. And that's wrong. What you do is you keep your original invoice and mark it paid in full, and then you manually add an additional expense called Stripe processing fees, and that will allow you to click the deposit on the left side and the invoice payment plus the negative Stripe processing fee, and that will allow the numbers to match, and then you can match it. All right, let's talk about fixing petty cash when you've manually entered some expenses that are outside of any connected accounts that you have hand entered into FreshBooks. They are going to stay over here on the right side forever. You can leave them there and do a journal entry to move the balance from petty cash to owner's equity, because that is sort of like you made an investment of capital into your business. But a hack that I recommend because of this limitation of FreshBooks is this. Let's use a common example. The only expense that you make not on your business accounts is that you use your personal airline credit card whenever you buy a plane ticket for work. I see that from business owners quite often. So you got to get those points, right? And so let's say the ticket cost exactly $555.55. I mean, exactly. So what I recommend is going into your business checking account and sending $555.55 to your personal account. And that's going to cause that expense to show up on the left side and get automatically put into FreshBooks. Except the expense is going to say that it was sent to personal bank account. That's what the bank date is going to say. And all you do is categorize it to travel, put the vendor as American Airlines, and then add your actual flight receipt. And then in the description, just add a tiny bit of extra note that says you accidentally paid for this on a personal card. That allows you to get that transaction into FreshBooks and categorized under travel, and it allows you to reconcile and not have to do journal entry. To fix your opening balance equity, you just want to get that number to 0. So if you had a balance on a checking account, it will be a credit to opening balance equity. So you're going to want to debit opening balance equity to clear it out, and instead you're going to credit your owner's equity or retained earnings, depending on the timing of how far back in time you're going. If it's a credit card that was connected, the debits and credits are reversed. Connecting your credit card with a balance puts a debit into opening balance equity. So you need to do a journal entry where you credit opening balance equity and debit either owner's equity or retained earnings. You would date these kinds of journal entries for the date of the starting balance of the bank rec. And I told you I'd teach you about disconnected accounts. I'm going to explain it in words, but you can also watch the full tutorial for this linked below. The video is called, "Oh Crap, I Disconnected My Accounts." If you disconnected your account, you basically treat it like you had one bank account and you closed it and you took all your money and you put it in a brand new bank account that you just opened. And the way to do that is on the account that was disconnected, make sure all of your bookkeeping is perfect up to the point of disconnection, and then you had that exact last amount that was in the account on that day that it was disconnected. Say it was $1,000 exactly. You're going to go and add a missing bank transaction for a money out of $1,000. And then for the new account, for the quote-unquote new account, start your opening balance at 0 on the day that it was disconnected. And then add a missing bank transaction for $1,000 going into the account. That is what would happen if you shut down a checking account at Bank of America, say, and opened it up at Relay, which is my preferred bank. It's the one that I use for my business. You would take that $1,000 out of Bank of America and you'd put it into the new bank. And that is how you have to think about what is happening inside of FreshBooks when you disconnect and reconnect an account. Please watch the full tutorial. Whoa, that's a pretty thorough review of bank reconciliation in FreshBooks. Please reach out to me if you need any help. I have a free monthly Q&A session that you're invited to. The link to register for it is below. There's no catch. Just come with your question and I'll answer them in real time. Please check out the video that should be popping up about free FreshBooks resources that you can access. I'd love to have the chance to collaborate with you as your advisor as you grow your small business. I'm Kate Josephine Johnson, and I help businesses build their business legacy.